Hello and welcome to Business Standard. Pakistan is a nation of immense promise and stark contrasts. It boasts a youthful, vibrant population and a location that bridges South, Central, and West Asia, giving it unparalleled strategic significance. Yet, for all its potential, Pakistan finds itself ensnared in a cycle of economic turmoil. Inflation has surged, the national debt has ballooned, and the Pakistani rupee continues to weaken against the dollar. Basic necessities like flour have become unattainable for many, with prices once peaking at 800 Pakistan rupees per kilogram. Even though inflation has eased slightly in 2024, the economic hardship for millions of Pakistanis remains crushing. Pakistan's economic troubles are deeply rooted in its history. Decisions made at independence, political instability, over reliance on foreign aid, and an inability to diversify the economy have left the nation in a precarious state. To unpack Pakistan's economic journey and explore the underlying factors for its struggles, I spoke with Khurram Husain, a renowned business and economy journalist and columnist based out of Karachi. With years of on the ground experience, Khurram brings unparalleled insights into the country's political and economic landscape. Welcome to Business Standard, Khurram. Khurram, to truly understand Pakistan's journey, we must go back to 1947. What were the unique challenges that Pakistan faced at birth that influenced its choices?
Ankur, Pakistan faced quite a number of very unique choices. Let's see. First among them would be the boundary question. The British had done an absolutely minimal job of overseeing the partition of the Indian subcontinent before they left. And I think on both sides of the border, we both know that they were in a terrible rush to leave. And they left a great deal of unfinished business. So Pakistan actually inherited indeterminate borders on the east and the west, the Durand Line, or what we today call the Line of Control, the status of Kashmir and the other princely states. This was all unfinished business. The hydraulic partition of the subcontinent. It was one thing to partition the geography, but it was another to partition the waters of the Indus River system. That was left unfinished, and that's a job that Americans actually had to step in and complete. And it took them many years to complete that. They didn't do it the way the British did the Radcliffe Commission, in a matter of weeks. Just goes to show how big of a job these things really can become. So indeterminate boundaries, the unfinished business of partition, and at the same time, Pakistan inherited what we would historically consider to be the western fringes of empire, whether British or pre-British, whether the Mughal or Sultanate, the territories that today comprise Pakistan were always the western fringes of empire. And over here, sovereignty came to mean many different things. The rulers in the center always dealt with populations living in this territory through sub-sovereign, potentates of sorts, whether it's the Khan of Kalat in Balochistan or the Mir of Hunza in the north, or the Nawab of Kalabagh, and so on and so forth. There was the Wali of Swat, so the lack of an institutional sort of a formalized, centralized state apparatus of sorts in this territory was another big challenge. On top of that was a challenge of the absence of any industrial base. There was hardly any industry to speak of, hardly any power generation capability on this side after the partition, and then coupled with that was the challenge of an absolute leadership vacuum. The country had been born very suddenly, very abruptly, overnight, and it wasn't yet clear what kind of a government they're going to have. So almost immediately, the debates between whether it should be an Islamic state run according to Islamic scriptures or whether it should be a secular state, that debate played itself out in the Constituent Assembly debates around the objectives resolution and whatnot. So in terms of its identity, in terms of its borders, in terms of its industrial base and its economic base, in terms of its state-making institutional apparatus, in all these, the country was lacking and had to basically begin the job of building all of these from scratch. So this was a very unique challenge, and I know of very few post-colonial states that faced so many challenges on so many fronts immediately upon their birth.
Did Pakistan err in how it allocated resources after independence? What could it have done differently?
I think some of the mistakes that were made, for example, in the framing of the first five-year plan in the 1950s, it says very clearly that they are going to privilege economic growth over every other question. And economies are built on things other than just economic growth. Redistributive justice is also important, after all. But they had made a decision, number one, that it will be economic growth, and number two, economic growth driven by industrialization above anything else. And number three, that the base of this economy will be situated in West Pakistan instead of the trying to tie the two provinces together. Now, the planners of that time will argue that they were, that they had a very difficult job to do under very difficult circumstances, and there is some truth to what they will say, but it is hard to really accept, Ankur, in hindsight, at least with the benefit of hindsight, that the path they chose was the wisest one, because this is the path that led eventually to grievances developing between Eastern and Western Wing around the question of redistributive justice, around the question of who is benefiting and who is being left behind, and who is benefiting at the cost of whom. So the Eastern Wing argued not just that they were being left behind, but that they were being made to finance the growth that was taking place primarily in the Western Wing. And we know that ultimately these questions led to yet another partition of the Indian subcontinent. I like to tell my students over here whenever I have taught in classrooms that the Indian subcontinent actually underwent more than one partition. The first one happened in 1947. The second happened with the Indus Water Treaty, which was the hydraulic partitioning of the subcontinent. The third happened in 1965, where there was an economic partition between India and Pakistan. Because prior to 1965, there was ample trade between India and Pakistan, and much of Pakistan's staple food came from India as well. And then another partition happened in 1971, when Eastern and Western Pakistan fell apart. So, we've got a series of partitions happening in the post-colonial period. And one of those definitely grew out of the question of redistributive justice. And I think ignoring this was a big mistake on the part of the early planning commission people.
There is a myth in some Pakistani circles that in the 1960s, South Korea tried to learn from Pakistan and emulated the Pakistan model to become the economic power that it is now. We know that the story is not true. However, their journeys are still comparable since they had similar per capita GDP in the 1960s and extended periods of martial law. But their economic trajectories have differed or diverged significantly. What do you think is the reason for that?
I think that there are various reasons. One has to do organically with the nature of the planning path that the South Koreans adopted versus the one that Pakistan adopted. And the other has to do with geography, with the fact that South Korea was situated in a region that was already seeing a lot of dynamism, economic dynamism within it, because of the imperative on the part of the Americans to re-industrialize Japan after World War I and to build a bulwark around China of economically prosperous countries that could help hold the spread of Chinese communism, much like what they were doing in Europe with Soviet communism. A similar thing was happening over here. So the South Korea and Taiwan in particular benefited greatly from their location and from re-establishing the regional connections of investment, trade and investment that had been there before the world wars. And the Americans helped re-establish that, number one. But also very importantly, round about the second and third five-year plans here in Pakistan, the advice being given to the Pakistanis from all the people from whom they were taking advice in those days, which included the World Bank as well as the Harvard Advisory Group. Both of these entities were advising that you now need to shift gears a little bit, move a little bit away from industrial growth as the only priority of the plan, and bring education particularly. There was, there was a big emphasis on that by the World Bank and by the Harvard Advisory Group. You might know that the Harvard Advisory Group actually refused to work with the Pakistan government for the second five-year plan because they said, look, if you want us, you've got to make education a priority. You've got to start investing in your people rather than in the mechanization of your means of production. Because it's the people who will then bring your future prosperity, not the machines that you are trying to make the drivers of your economy. And the Pakistani government chose to not work with the Harvard Advisory Group, went with the World Bank instead. The World Bank gave them the same advice. They ignored that advice and powered ahead instead with industrial growth. And the second and third five-year plans continue to be built around promotion of industrial growth rather than anything else. And it's the fourth five-year plan where things then fell apart, that came together around 1970, around the questions of redistributive justice. At the same point in time, the Koreans were launching their own five-year plan in the early 60s. I forget the exact date, but it's round about the same time. And they made education a priority in theirs. And they actually began to invest. Now, to some extent, I think that may be because they had the option to build a mechanized base of the economy and acquire the technology, the technological basis of, modernization and economic advancement from other channels that they had through the regional integration in the regional supply chains that I mentioned earlier. But to some extent, I think they did recognize and they acknowledged that if you don't invest in your people, then whatever investments you make in machinery as of today will be short-lived. Their benefits will last only a few years, and eventually it will go. The benefits will dissipate. But if you invest in your people, that will last for generations to come. I think they realized that much earlier than Pakistan did. I don't think Pakistan has realized that even to this date, frankly speaking.
In your view, could Pakistan replicate South Korea's success by adopting similar strategies today?
I don't think so. I don't think developmental paths are transferable in this sense. I think broadly speaking, some lessons can be drawn from South Korea. One of which would be invest in your people. That pays dividends over a longer time horizon than investment in machinery does. I think to that extent, yes. But I think specific policies, if you argue that, well, in South Korea, they advanced industrialization through cartelization, state-sponsored cartelization. So if we do the same here, it will help. No, I don't think that lesson can be transferred. Or if you try to transfer the lesson that they ran with functional inequality for a while, saying that, well, let wealth be unequally distributed in the early stages of industrialization in the hopes that down the road, in later stages, it will trickle down. No, I don't think that lesson should also be transferred. So I think broad and directionally, perhaps, but nothing more than that.
Are there any other models Pakistan could adopt today and reverse course?
Well, Ankur, one model that many in Pakistan, including myself, are urging people to over here to look at and to consider is India in the early 1990s. Whatever happened in the 60s has happened. From the 90s onward, the new world was born. And in that world, a new set of economic thinking or a new type of economic thinking was required. And new relationships between state and capital, between capital and labor, between land and labor, but between all the elements of development and economic dynamism. We call that reform, basically. And from our perspective over here, India was I'm saying was, but because I'm not sure where things stand today. But until recently, at least, was an example of a country that had high rates of economic growth over a stable period of time without falling into constant crises, balance of payments crises. So India was able to sustain economic growth without landing in the middle of a balance of payments crisis. India was able to sustain large primary deficits on its fiscal accounts, large current account deficits, without depleting its reserves, without driving up its domestic debt to unsustainable levels. How was all this done? I think when we look more closely at the kind of reform experience that India underwent during the 1990s, people in this country can relate to it because there are a great deal of similarities between India and Pakistan. I mean, culturally, I mean culturally, but beyond that as well. And what worked in India, people here can relate to it. But if I bring lessons from Argentina or from Brazil, they seem a lot more distant. And then caveats begin to apply that will this work over here? Because regionally, that was a very different context in which those models worked and produced the results that they did.
How has political instability and the elephant in the room, the military's role in governance, affected Pakistan's long-term economic planning?
Very, very fundamentally. It's because of political instability that Pakistan has been unable to develop a coordinated, or should I say, a coherent response to the new world that came into being in the late 1980s and the early 1990s. A world that at that time, it's the architects of that world called it globalization. It's somewhat of an antiquated term now, I think. I don't think people use it as much anymore, but in the 90s, it was everywhere. And it was this globalization that presented every country in the world with the same challenge. There's a global market coming into being. How do you plan to now take advantage? How do you plan to maximize the benefits that this market can offer to you? So there we have examples of countries like India that were successful in bringing about these reforms. And the proof of that success is in the sustained high growth rates that India registered from the 1990s through the 2000s. Then we have examples of countries like Pakistan or Sri Lanka that would participate in the global market, but then kept finding themselves in the middle of a balance of payments crisis. So every time their participation in the global market increased, they depleted their foreign exchange reserves and had to require an emergency bailout. This absence of any kind of a coherent response to the question posed by the global market is the legacy of the political instability. The fact that one after another governments that came into power were preoccupied with the question of stabilizing and consolidating their position and never really graduated to being able to articulate or take on a larger time horizon beyond a few months. They were too caught up in the question of survival. Pervez Musharraf, that regime came, they had an opportunity, but at that time, they were, I suppose, too distracted, to use a euphemism here, by the post 9/11 bonanza that was coming Pakistan's way. It seemed as if Pakistan in those years didn't need to do any hard work in order to gain benefits from the global market. The patrons of this market were too happy to shower these benefits upon you in return for Pakistan's participation in the war on terror in Afghanistan. Though that sort of, we had a story of reform interrupted in that time too. Although, to be fair, a lot of really significant reforms did take place during that time. But obviously, whatever it was not enough because once again, Pakistan landed in the middle of a balance of payments crisis by about 2008, which the rulers of that time blamed on the global financial crisis. But, not every country in the world went running to the IMF in the global financial crisis. Many did, but many didn't. And then the obvious question is, why did you fall in the category of those that did go and seek an emergency bailout if you had undertaken such far-reaching domestic reforms? The answer is simple. The reforms were undertaken, but they were nowhere near as far-reaching as the general would like to have us believe.
Is there a need to separate political and also military influence from economic policy making in Pakistan?
I think economic policy making can never really be separated from politics, right? The two are inextricably intertwined, and often it becomes difficult to tell where one ends and the other begins. They are inextricably intertwined. But what is important is that the character of the politics that is impinging on economic policy should be democratic in nature. That is a critical thing. When you have a military in charge of making economic policy, things tend to go wrong. And Pakistan is a case study in that. Um, I'll give you one example, right? For example, a military ruler is more likely to spend scarce foreign exchange resources in an arms buildup rather than invest it in developing the future productivity of the country. And that happened here in Pakistan. It happened in the 1960s. It happened again in the 1980s. It happened a third time in the 2000s. And beyond that, we've seen that military, army generals may have many other qualities, that are admirable and that we can admire. But one quality they don't have is an appreciation for how complex human society really is, and how big the tapestry of a country the size of Pakistan, country of 240 million people really is. You cannot run a country this size on command. Whether the economy or even the politics or culturally or anything. At some point, you have to recognize. Any ruler has to recognize, especially in our age, in the time in which we are currently living, they have to realize that the world is bigger than you. Any ruler has to realize that. And the best you can do is to lay down the rules by which others will play, but you cannot tell them how to play the game. You cannot command people to invest where you want them to invest, to expect the returns that you want them to expect. These things have to come about through an organic process of decision making that takes place on a playing field that you curate as the ruler, but you do not tell the players what to do. So in that sense, I think generals have a harder time understanding this because command is something that comes naturally to them. Letting things be, curating the rules of the game, that doesn't come naturally to them, and it's something that they don't really understand. Or by the time they understand it, it's usually too late. So I think for that reason, it's important that politics remain a part of economic policy. But I think the generals should not be given too much sway over the making of economic policy or economic decision making.
Now we come to the role of the IMF. Are IMF bailouts a lifeline for Pakistan, or do they perpetuate a cycle of dependency?
Both. They are a lifeline for Pakistan, and they do perpetuate a cycle of dependency. There are multiple reasons why this is the case. I think the IMF, as an institution, has not really been, let me choose my words carefully here. It has not been the honest broker that it is supposed to be when it's dealing with countries that are borrowing from it. There are numerous instances where the IMF gives a rosier picture of Pakistan's economy than is merited by the economic reality being painted by the numbers, by the data. And one of the results of this is the fact that Pakistan keeps coming back to the IMF. Even after the IMF gives a clean bill of health, the country keeps coming back for another bailout. Obviously, something is going wrong. But on the other hand, I think it's not possible to expect that the IMF and its bureaucrats can transform Pakistan. I don't think that it's fair to expect that the IMF can want reform in Pakistan more badly than the Pakistani authorities themselves do. It can't get ahead of the authorities. So ultimately, the failure lies on the government side over here. The inability to articulate a proper reform agenda of their own and then to follow through on it. And you can see that failure in multiple places. Look, for instance, at how long they've been trying to advance the privatization program and not being able to do it. And look at the accumulated losses on some of these state-owned enterprises, like PIA, for example, the national airline. They can't carry this airline anymore. The accumulated losses are so large that they are now competing with, major debt drivers on the country's balance sheet. And they can't seem to privatize it either. They just tried to, and it was a colossal failure, because the way they just structured the whole deal, no private sector party was interested in bidding for it. They're stuck with it. So, the failure to develop a coherent reform vision, that is the original sin. And from there then flows this relationship of eternal bailouts, followed by, a relationship of tossing a lifeline, followed by inability to make reform happen. And so you're back to throwing another lifeline again.
How can Pakistan reduce its reliance on foreign loans?
Well, the simple way is obviously to raise the productivity of the economy, make the productive assets of this country more competitive in global markets. There's really no other way. All other ways are shortcuts, right? Then you have geopolitical rents, and you have brotherly countries giving bailouts and or asking for state-led investment, such as of the CPEC variety. Which hasn't worked, right? But the big question is, how do you do that? Where do you even begin? And I think there are no short answers to that, but it's important to study the experience of regional countries in South Asia that have been successful in bringing about these transformations.
In the last decade, Pakistan has come to depend more on China and Chinese investments, particularly through CPEC. Has this reliance on CPEC investments been a net positive, or is it a growing headache?
Look, it's become a liability right now, but again, in hindsight, it's very easy to say that. At the time when CPEC came, it's very important to understand how it looked at that point in time to those rulers, right? Pakistan was languishing with a dismal economic growth rate from the great financial crisis onwards. It was a country that was hit very hard by the great financial crisis, mainly because it was standing on such a weak wicket to start off with, with very large external account deficits, ballooning fiscal deficits, massive growing subsidy bill domestically, and then came the great financial crisis. So the impact of that meant that growth had stagnated to about 2 or 3% for many years. I mean, from 2008, 9, 10, 11, 12, the economy stabilized in terms of its deficits, but growth remained an elusive dream. And also the power sector had begun to shut down by 2013 due to payment constraints, largely. So that is the condition under which CPEC came. The large parts of the country were seeing 16-hour power outages, and people were saying that, whatever it takes, get the power system running, get electricity going again, and get the natural gas flowing, because Pakistan was running on domestic natural gas that had run out by about 2010. Though those shortages were beginning to bite. There was a very serious energy crisis sweeping the country in 2013, a very serious, protracted period of economic stagnation. So when the Chinese showed up with humongous bags of cash, willing to finance massive projects, including in the power sector, and to the government of Nawaz Sharif that had campaigned on eliminating the power crisis, this was a godsend. This opportunity. And it's hard to imagine how any ruler in that condition would take the long view and not take the money that was being offered. It's very hard to imagine. If we just get realistic for a minute, in an ideal world, yes, they should have been more careful. But obviously, we don't live in an ideal world. And any ruler that has been suffering for years under economic stagnation and an energy crisis will jump at the kind of offerings that the Chinese were holding out. This happened not only in Pakistan, it happened in many other countries too, right? It happened in Kenya and Zaire and many other countries. So they took the money, they installed the projects, and now they find out that, the projections that we had built the viability of these projects around turned out to be, unrealistic. They had assumed that once the projects are installed, the question of energy shortages is resolved, that the economy will begin to then grow, and with 6, 7, 8% growth rates, the economy will generate the resources with which to pay off these investments. That was the overall thinking under which CPEC was advanced. Instead, Pakistan sank into one of its old balance of payments crises in 2018. And had to go back to the IMF, and growth plummeted to about 2% all over again. And as a result, you could almost say the tide went out, and suddenly these projects were stranded assets. And instead of being drivers of productivity in the economy, they turned into liabilities. And now, the big question is not how much power are these generating. The big question is what is the cost that they are, how much are they costing the country? And as a result, what was supposed to, or what appeared to be a bonanza, has now turned into a liability.
How can Pakistan salvage some sustainable benefits out of these Chinese investments?
Yeah, certainly. I mean, it's not a hopeless situation by any means. Bear in mind, many of these projects came online in 2017. The bulk of their payments were in the first decade of operation, which means by the year 2027, many of them are paid off. And 2027 isn't that far away, right? I mean, I think to the Prime Minister, it seems like a lifetime away, probably. But to you and me, it's not that far away. There is an endpoint to these payments and to these liabilities. After that, another set of liabilities. There are some other hydropower projects whose payments will begin shortly after that. I don't have the data on that yet to be able to tell you to what extent, but at least many of these sort of thermal power plants that were installed in 2017, whose capacity payments are weighing heavily on the power sector today, they would have paid themselves off by 2027. So there is a cliff, a few years away, after which the payments are supposed to come down very sharply. And already under the auspices of the IMF program, the debt to GDP ratio is already improving in the country. So the situation is not by any means hopeless. It can be stabilized in a matter of a year or two. The big question is, how do we start growth after that? And that is one area in which I'm seeing little to no serious thinking these days. There's a lot of stuff being said around it, but I won't classify it as serious thinking.
What are some of the key reforms that Pakistan needs to implement, to break out of its current economic turmoil?
One of the key reforms, obviously, is to help broaden the base of exports. Okay, again, frequently in our internal conversations there, the example of India is given. You just look at the base of India's exports in the 1980s and then look at it today as a snapshot, and you'll see there's a broadening that has taken place over the years. That was supposed to have happened in Pakistan from the early 1990s. Instead, Pakistan was a cotton exporter in the 1980s and remains primarily a cotton exporter now. There's been some value addition in the sense that, okay, back then, they exported maybe yarn. Now, made up fabrics and made up garments or whatever has taken their place. But that doesn't really count as broadening of the tax base. Where's your chemicals industry? Where is the minerals? Where is IT and knowledge products? Where is pharmaceuticals? And then so many others. That's crucial. Okay, without broadening the base of exports, it's very difficult to restore sustainability of the external sector. I think another important reform is important to promote foreign investment in the country. But I think so far the generals are thinking that if they give special incentives to foreign investors, that they will come. What they don't realize is that when you offer special incentives to foreign investors, they are more likely to become suspicious. When you tell them that, look, if you come and invest in our country, we will ensure that your projects are will be above the judiciary, right? No judge will be able to take notice of, anything connected with your project. That doesn't give them confidence. It leads them to ask, well, what's wrong with your legal system that you need to give us an exemption such as this? And that the answer to that question then leads them into, places that sort of deflates confidence rather than builds it up. So they need to understand that curating the economy is more important than pumping growth within it through special schemes and incentives and things like that. And then some, important pricing reforms are necessary. Pakistan began to undertake those in the middle of the 1980s and then stalled. So, all prices were administered prices until then, a legacy of the old era of the 5-year plans from the 1960s. And that legacy had to be rolled back. Market-based pricing had to be brought in. And to some extent, it was. In cotton, for example, the prices were deregulated in the 80s. But many other agriculture areas, I don't understand to this day why sugar has to have such a complex administered pricing regime to it, along with a licensing regime around it. You need a license to be able to set up a sugar mill. For the life of me, I can't understand why that would remain a priority at this point, in the 21st century. Pricing reforms are important. Regulatory reforms are important to breathe confidence into investors, whether domestic or foreign. And then reforms to help promote the broadening of the export base, the industrial base more broadly, but the export base as well. And I think taken together, these, I'm sure there are others, but taken together, these will help the country overcome its persistent sort of limited growth possibilities.
If we were to look towards the future, how can Pakistan leverage its strengths, for example, a very young workforce, and some people may say a strategic location to revive its economy?
But tell you the truth, Ankur, I don't really believe in strategic locations, at least not where economies are concerned. It's a canard that is often thrown around within Pakistan. People talk about our geostrategic location, blah, blah, blah. I don't buy that, right? I don't buy that there is any such thing. So the less they actually try to leverage that, the better it is. Because we've had some absurd ideas come out of this thinking that Pakistan's location is strategically important in an economic sense. Maybe in a geopolitical sense, it can be considered in some ways, whatever. But in an economic sense, absurd ideas like regional connectivity with Central Asia, it makes absolutely no sense that you invest that kind of money to connect with economies whose size is either smaller than your own economy size, or at the very best, it's the same size. The only area in which connectivity with Central Asia makes sense is energy. It's an energy surplus region. Pakistan is fast becoming an energy deficit region. Sure, from there it can come. And then from Pakistan onwards into India, perhaps. So if we can imagine a natural gas pipeline coming from Turkmenistan into Pakistan and then continuing on into India, fine. But I think that sort of thing, it's been on the table for a quarter century now, but at best we can imagine it, right? It's not really about to happen for various reasons. One is obvious. The path has to come through Afghanistan. Who's going to secure it? Number two, who's going to create the trust between India and Pakistan that, the pipeline will not be shut down arbitrarily to pursue political aims, et cetera, et cetera. It remains a pipe dream. So I think the less they think about geostrategic location when going about solving economic problems, the better. They need to, the focus of the rulers needs to be on more bread and butter economic decision making. Simple things like appoint professionals with experience in the relevant area to head the regulatory bodies. Get professionals from the oil and gas sector to head the Oil and Gas Regulatory Authority or the National Electric Power Regulatory Authority or the Securities and Exchange Commission of Pakistan, and so on and so forth, right? And empower the Competition Commission of Pakistan to actually start going after cartels and breaking up cartelized behavior, discouraging it. This is not sexy stuff. This is not, it doesn't entice anybody, but this is where it has to begin, the process of repairing the economy and setting it on the right path.
Thank you for joining us, Khurram.
Okay. All the best. Thanks.
That was Khurram Husain helping us understand Pakistan's economic challenges and the way forward. For more such conversations, keep following business standard.